Welcome everyone. It's a beautiful Sunday and I decided it was a great opportunity to record another video in a new series of technical analysis that we're going to cover applying Hawkeye Traders set of tools. We talk about Roadkill, Fat Boy. Also we'll have Hawkeye Trader Volume. We'll have trend and stop losses, and of course we will also have the Heatmap. Now, as usual, keep in mind these videos are for educational purposes only, and everything we have here is just giving you an idea of potentially what may not happen in the markets. And all time, remember that past performance does not constitute future performance. Okay? And as usual, if you haven't seen my previous videos, my name is Jose Ricardo Tejaen. I'm the editor of the Prosperity Digest newsletter and product specialist at Market Search Daily. Okay, great. Having said that, let's jump to the content that we have for today. Now, next week, in the next 3 days, according to the economic calendar, we're going to have Stephen Poloz. He's the governor of the Bank of Canada, BOC, and the consensus is to expect a 1.75. There won't be any change in interest rates. There's no need for that, and this is the same narrative we have as a team of analysts and as pretty much a company. We don't see that things are as bad as everyone indicates. There's this idea from economists and some analysts in Australia, for example, in the case of the RBA, that the Reserve Bank of Australia has to prepare themselves. No one's going to do that, and the same story goes for the Bank of Canada. No one is going to make a drastic move unless the Federal Reserve does that. The idea behind this, the fundamental idea, is that everyone is on waiting mode and see what happens with the U.S. economy that has been so far one of the best performing economies in the G10 bloc, developed countries. You have other economies that have been doing really well, as India. I think you can probably put Vietnam there. We have to review those figures. But what we want to say and want to explain in this video is potentially how technicals are aligning and are favoring potential move that can translate into a $4,000 profit. Of course, there's a risk. I will explain more of that in the charts. But basically, you will be aligning yourself with technicals. We'll look at the Hawkeye Trader Volume, how it works. I will give a little bit of explanation and give all the necessary details for you to set this trade, have this trade on your radar, or list of potential trades to structure this week to start building up a short position in the currency pair US dollar versus Canadian dollar, USDCAD. And remember, before you trade Forex, before you decide to go into your Forex technical analysis, you should not only consider the technical view, also add a little bit of the fundamental. For example, last week, macro data from the US wasn't the best. It was they said the small US data. I don't think it was at that level, but that's just my perspective. It's just an idea of adjusting. Economies, they have to reprice themselves to their own reality. And after 10 years of prosperity, well, absolutely, it's time to take a look at what may not happen in the future. And if the US dollar reprice to the downside, it's actually the figures right now, we're talking a 10 to 12% overvalued US dollar, and that's a tremendous opportunity when you take a look at currencies as the euro, the pound dollar, the dollar Canadian, and of course you have the Canadian dollar, Australian dollar, New Zealand dollar. When it comes to risk currency pairs, where investors buy them to have some sort of protection, you're looking at the Japanese yen and the Swiss franc. That's not the case. The repricing does not occur the same way, so you have to. It's not the same pattern of repricing. When I discuss repricing, it means that if it's overvalued, it has to reprice, adjust. It means that it will go go lower, but it's not really that that the currency is moving lower. It's repricing itself to current realities, and these actually translate to a short opportunity in some cases. In the case of the Australian dollar, the New Zealand dollar, it's a buy opportunity for those currencies. In the case of the currency pair USDCAD, it's a short opportunity. And like I said, there's a $4,000 potential. So let's go and take a look at the charts. We're going to go directly through Trading View. Just before I do that, let me share with you the economic calendar. May 29 in 3 days, 15 hours, 16 hours. This has to be New York time, Eastern Standard Time. Here, BOC rate statement, primary interest rates, and then the BS interest rate decision will be here in this area. We'll expect this to stay consensus 175. I'm lining up myself with consensus. We're gonna be the same, but I do expect a neutral to potential slightly hawkish view, where the Bank of Canada does not make any comments when it comes to decide where are the future of the interest rate going. There's a lot of consideration, but we have to put that in perspective. Let's move to Trading View, our chart software that we're going to use for Hawkeye Traders. And we have here loaded Hawkeye Volume pack, also Hawkeye Heatmap, and we also have the trend stops with a slightly adjustment on. We have on the aggressive levels to start working with this. Now, what the first thing I look at, and remember, I start from monthly, weekly, daily, and then 4-hour chart. We're going to take a look at the volume in the long term. Now, it's not a secret that over the last couple months, we have here all the way at least more than 12 months, this currency pair has been on technical levels. And if you look at the volume, this is professional volume. This is information you're receiving when you use Hawkeye Traders. We have it available in Trading View, MT4, Ninja Trader, and Trade Stations. Now, this indication is professional volume. The heat map at this point is a little bit of discrepancy because it was totally red. There were a few red, short opportunities that were, for example, these at 131.26 all the way down to 125, almost 600 pips opportunities to short. So what's the discrepancy in somehow aligning together? But the idea you can get out of these series of months, it's accumulation of professional buying. Then previously you have these 2 red candles. I'm just gonna zoom. You have 2 months professional selling in accordance of what we have in the heat map and also on the Hawkeye Volume pack. The purpose of explaining these videos and the new series of videos is applying what we think is the most advanced technical tool to professional traders. Hawkeye set of tools are part of different hedge funds, technical analysis, and we think it's time for retail traders also to tap into the power of all the single tools that the team at Hawkeye has been developing. Just give me a second. Drink some tea. And the way we're going to work is looking at volume. We're going to look at the heat map. Where is momentum heading? And we're going to take a look at the trend and stops, because we want to make sure we understand where the stops placed and what we have to take in consideration before we go in. Now, the dollar Canadian last week, again, it's still above 134 for 4 months. Let me just zoom. You can have it. We have monthly, 2 months. It's more in weeks. But we have, for example, this month, 134.60. Then we have 2 months where so far, next week we end May, we have not been able to trade above 135 at all. There's no continuation to the upside. So the smart money, it's indicating that they don't want the dollar Canadian to trade above the 135 level. In fact, we had a little bit of trading 135. The high here 135.21, and in May 135.13. Now the data we get in using Trading View, it comes directly from Rwanda. It all is going to change. The high, the lows will depend on the provider you're using, the currency provider, currency broker. It all depends. That's your call. Now what we're looking now is there's this neutral concept of volume matching this volume. It's very weak compared to the previous months. We have here all these months, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, almost 12 months of high professional buying. And then you have previous months. So previous months we have professional selling in accordance the volume and the candles represented. And as you can see, similar timing we have on the heat map. Now, that's not the case. We have a heat map showing bullish momentum. The volume is not there anymore, and that triggers me on the monthly chart that we must prepare for a massive rotation in price, massive repricing in the USDCAD favor, which at the end favors the Canadian dollar. This is not something that should surprise anyone, as also if you take a look at, I'm just going to move to MT4. We will talk about this in our next video, the future, what we see the forecast in the next 12 weeks for the US dollar index, DXY. And what we're expecting is a potential change, price rotation all the way to at least the 38.2% Fibonacci, 94.39. We also expect that if markets move sideways, they can have a surprise, one more push to the 93.20, and that's why we have two trading scenarios in the next 12 weeks and also moving in the next year and a half all the way to summer 2020. But before that happens, we want to keep our eye on this short position. Now, we know one, volume has shifted. There's no professional buying. There's not really any professional selling. Although the heat map, Hawkeye heat map, is indicated favoring green. That's potential bullish momentum. We are lacking volume. Now, if we take a look at stop losses, we know that they are set at 136.45, way above the level. But keep in mind, this is a monthly chart. And then the next set of stop losses, it's set at 33.07, and that tells me that as soon as those are out, they will trigger further selling pressure. Let's look at the weekly chart, see what we have to offer. And now the view is a little bit different. Slightly, we now know that on the weekly chart we have buyers, professional buyers, but it's limited. Look at what they had before. We're talking all the way at the beginning of 2019. The selling evidently pushed prices lower, favored the Canadian dollar. Then it was a neutral state, accumulation. Prices moved sideways. They rotated between 133 and 130, almost 210 pips rotation for about 4 weeks. Then the breakout took place to the upside, and there's a new rotation all the way. We have this rotation 134.66 all the way to 132, almost 180 pips, and then once again slightly touched to the upper side. We have this final resistance, historical resistance at this level, and prices are now 1, 2, 3, 4, 5 for 5 weeks. Prices are just holding. They're not moving above. This case, this week, prices went as high as 135.21, 134.91, 135.05, 135.13, and finally this week closing at 134.38, but the high 135.02. So for 5 weeks, there's definitely something to say about the 135 round figure mark. Professionals don't want Professionals don't want to see prices going up above, and now we have finally another evidence. We have on this weekly chart, we have our set of stop losses 132.05. So prices not only thinking about what happens if we break on the monthly chart those red dots we have. Our next target easily on short term in the next 2 days, if sellers can break the 134 mark, will be the 132 level, and below that level we then have the 130.37. Now, as you can see, volume is not as high. You can notice how volume is not as high as previous weeks. We have these important levels where there's absolutely nothing, and it goes and tells you why it goes sideways. And then finally the breakout. Heat map, volume slightly lower from previous selling between December and January December 2018, January 2019. So it gives you a clue that something is about to happen. And as we know, the dollar index, DXY, it's trading below 98. So everything seems to be aligning. Also, last week, fundamentals from the US, I repeat, fundamentals from the US slowly missed expectation, and that gives you that we may be in the presence of the shift. Now, on May 14, have it, and let's share this. We put out our call, May 14, we put our call. We shared this with Gregory McKenna in Australia, Indonesia, Ivan Delgado, and also with our friend Thomas Callum in Australia, in New Zealand. He lives in New Zealand. And we put our call going short, and we went short around 97.30, 97.40. That was a May 14, so we had almost a 90-cent drawdown in our dollar index call. We pointed as a team that Goldman Sachs got stopped a couple months ago when they started at the beginning of the year a short position, and their stop loss was at 97.50. Of course, they got out. Then the market went to test 98. And then this week we have in the last 2 weeks we have a double top, where the markets went as high as 98.30 and then subsequently 98.37. So that's give you an idea where are we. So we keep it short, and we're targeting 94.10, 93.80 in the next 12 weeks. That's our call on the US dollar index. And if that takes place, of course, it shouldn't surprise anyone that we will see the US dollar, USDCAD, US dollar, Canadian dollar, moving all the way to these levels. Let me take this out. So this is what we have so far as for technicals. Now, let's move to the daily. Now, on the daily chart, we see again something interesting. This is what we're calling for a short-term trade. And before I end this video, we'll share with you the two views, the two trades that I have in mind for this week. So we have the 33.70, and then we have the 33 level. Again, level stop losses. See how prices have been rotating. So you shouldn't be surprised if one more time on a daily chart we have one more push high to even bring in buyers, trap them, and then shift to the downside. This is very important to keep in mind. We cannot discount this level of action for this week. And finally, on the 4-hour chart, this is where I wanted to share with you. This is discrepancy. Heatmap, green, but volume. We have volume. And take a look at this big bar. This is a big professional selling that took place on the 4-hour chart and sets the level. Key volume level of selling at 135. This is very important to notice. You should write it down. It's not that only it reversed and you can say you have a candlestick pattern that developed. Not true. You also have, in this case, you have the volume. This volume here. Look at it. This is a professional selling via Hawkeye Volume. And then we have neutral. Prices tend to continue. Physics 101. Prices will continue unless there's another force coming up. We don't have that force. We don't have that massive volume. We'll require a candle of volume here going in, pushing prices higher, not happening. So we are on the verge of a breakout. Where are we heading? Where's the direction of this breakout? We're about to figure this week. We already have, as mentioned, we have data, macro data from the US. It was not very supportive of the US dollar. US dollar then breaks to the downside after a double top above 98. Price is now testing 97.40. Let's just see that. Take a look. 97.44 closing for the last week, and this is something to consider. Next key level in the short-term chart, 134.20, and this is where we should be looking at. Start building up positions at current pricing. Any push higher will be set for us to go short this position. Now let's take a look at the entries. What we're looking at this is for our positioning. I'm going to now look at monthly chart. We review all the necessary information to start this positioning. Take a look at the weekly. And here we go. The weekly chart we'll be looking at least for a week between Monday and the end of probably Thursday, when we have everything on stone as far as comments on the Bank of Canada. So then what we're going to do is this. I'm going to take my short position, see where I'm heading. Have this. And let's get ready. So my first target, short-term position, if 135, I'm going to place it at 135.30. If the 135 round figure level does not break, as long as that happens, we're in for a short position all the way to 132. That's what I'm looking at. 150, 150 pips in a week. The appreciation for the dollar Canadian shouldn't come as a surprise. Historical levels, historical data indicates that that's common. In a single session, in a single day, the dollar Canadian can go as low as 150 pips. So if we're moving from 134 all the way to 132 in a week, we're taught this is absolutely 200 something pips. We shouldn't be surprised that this will take place. And now, in the long term, this is where I want to take a look. In the long term, this will be my, we have it, we have here, this is just again sharing with every one of you. This is the short-term trade, short-term, probably moving into medium term. But the long-term view that I want to share with our audience is this: what is going to happen in the next 11 weeks, because if the dollar index already started moving below 98, the level 98 last week, that's the first week. Probably count the week where we started shorting, May 14. But looking at the monthly view, take a look at this. Where are the stop losses? I want to play with this too. And I want to say, I wanted to my short position, and I want to take a look at this and play with the long-term stop losses. I'm going to set my here using the high, this high, the June high. It's a 135.47, and I know my stop losses are trading around 136.45 thanks to the Trend Stops Hawkeye technical tool. And I will set this, and I'm looking at this level where the stops are. I'm looking at potential move to 27.80, but it all depends. Let me just adjust to the current price, 134. Move to the 135.60, move to this location. I will use the stops. Just move to the entry level, so it makes more sense to go with the stop losses as I wanted to have it. We have this level, and first target, the red dots, we have the 133, and then we're going to push all the way lower. We have the 130 level, and also I'm targeting all these selling pressure that we previously had in somewhere November 2017, based on the, do you have the red dots? This is all I can see happening in the next couple weeks for the US dollar index. Remember, what we're looking at is now the absence in volume. There's no really professional volume coming here. I cannot say it's bullish. I cannot say, just move it. I cannot say it's selling pressure. There's no buying pressure, professional buying pressure as it used to be if you start February 2018, ended December 2018. So I can see how professionals, you can see that too. You can see how professionals are abandoning moving into long position on the US dollar in this currency pair. The heat map, a little bit of discrepancy. I expect this to be adjusted in the next couple weeks to red, and that will give us the perfect combination. All the stars are going to align for us to push this currency pair all the way down to 127. The idea will be, of course, we'll look into a risk-reward ratio 3 to 4, but keep in mind that the most important will be to understand that as it keeps going lower, we'll have multiple areas where you can take profit. That will be profit taking, and at all time, once you are 200 pips in the money, you will be looking to move your stop loss from your first entry at least 50 pips break even. Now, if you have any questions, feel free to add your comments, add your questions to this video in the comment section. In the description, if you're interested to get a trial, start using one of the most advanced technical software in the industry, not only for Forex, we also take a look at equities in the next couple weeks. In the description of this video, you will find the link. Okay, you will find the link where you will have the PDF. We'll have a ebook where you can understand more the use of volume, how to incorporate volume in your trading, the Hawkeye trading tools. Today we saw Hawkeye Trend Stop, Hawkeye Volume, Hawkeye Heatmap, and that gives you an idea exactly how to enter your trades. Now, of course, there are more to see. We have the Hawkeye Roadmap, the Roadkill. You have Fat Boy, Fat Man. They explain more about weakness and trend direction. So, like I said, if you're interested, go ahead and click on the links in the description so you will have the ebook where you can learn more. You can learn more about these tools, and also you will have an opportunity to go and have a free trial as well to access all these tools. You don't have to worry. If you have MT4, we got you covered. TradeStation, NinjaTrader, and TradingView. They all have been coded in these different platforms to allow you, and as you can see in the case of NinjaTrader and TradeStation, for professional traders. If you're still using your first steps Rigid Trader, feel confident that we also support TradingView and MT4. Once again, my name is Jose Ricardo Tejaen, editor of the Prosperity Digest newsletter and product specialist at Market Traders Daily, wishing you a happy Sunday and great trading in the week ahead.